This conference will now be recorded.
All right. So, hey, Barbara, if you could just give us a little introduction of who you are, what company,
Mhm.
your experience, give us a little rundown of yourself so we kind of
Sure,
know what you're all about.
sure. I'm Barb Elder. I'm a certified public accountant. I work for Duck Tax and Accounting Services. This is a business that I started after I moved down here to Richmond. Prior to that, I worked for a company, a public accounting firm called Ernst& Young. Um, yeah, so
Yeah,
I do taxes. I do back office work for small businesses who need my help. So that's basically what I do.
perfect. So I kind of dubbed this conversation as just money talk in general. So it's not
Yeah.
all CPA related stuff. And one of the things you and I chatted when we were on the phone together is, real estate agents, and I'm sure you have this same challenge with other professions that you are, part of your services for them is, how do they organize their time and organize their money and their expenses? We have people on the call that are literally brand new licensed all the way to people that have been in real estate for 14 or 15 years. So can you give us a few kind of organizational tips and maybe ways that they need to start thinking in a bigger space, maybe if they're just getting started?
Sure. In terms of organization, I think that and this is just talking from an accounting perspective, when you organize your business, you're going to want to do a couple of things. You're going to want to do a lot of things, but one of the key components when you start a business is you need to organize your income and your expense. You need to organize your income and your expenses. So you need to set up what's called a chart of accounts, which is basically a set of accounts that says, okay, I have income coming in and it's coming in from one source of revenue or two or three different sources. And then you identify each one of those sources of revenue so that you can keep track of it for IRS purposes. And then you have these expenses, right?
Yeah,
So do you want me to talk about the expenses now? Or are you going to ask me a separate question about that?
we could
Or,
talk a little bit about that a little bit later.
okay.
Just, I'm just thinking like one of the things that we were kind of talking about is keeping track. There's just so many different types of expenses. And if they're new to real estate, what are some, we can talk about it now, I guess. What are some things that you feel like are almost a requirement they need to just keep all the receipts for? Because sometimes they don't even know what qualifies for a deduction or not. So how would you tell them to get organized on what, like, their buying habits of what they're buying?
Right. So I definitely, for IRS purposes, you definitely want to keep all of your receipts. I think one
Okay.
of the best ways to track your income and your expenses is with an app. There are some really great apps out there, and we can talk a little bit about that later. But, there are some pretty major expenses that can save you they can save you a lot of money when it comes to tax returns. Um, these expenses are deducted dollar for dollar on your income. So if you make $1,000 of income through your new business, and you have purchased a computer or even printing paper, or you've gone out to lunch with clients, all of that is tax deductible dollar for dollar. And if you have spent $1,000 worth of those kind of activities, then guess what? You don't owe any taxes on that $1,000 that you made. So
Yeah.
I think that people, they don't really always understand the impact that these kinds of expenses can have. So let's just specifically meals, mileage, your personal home office, and any kind of equipment and supplies. They're all directly tax deductible, and they can reduce your taxable amount, which is the amount that you will owe the IRS at the end of the year. So,
Right. Why
right.
do you think people don't track that stuff? What do you think is the mindset, or what in your experience is the reason why people don't keep track of that stuff? Because I mean, it sounds
Well,
simple, dollar for dollar, but then we hit reality, and that doesn't always happen, right? So,
right. It's a lot of work. That's the
okay.
key. It's like, gosh, I've got to I've got to sit in my car and I've got to bring out my little notebook and I've got to write down my mileage. And then when I stop, I have to remember to write down my mileage again. And then when I leave, I have to remember, I have to write down my mileage again. And then I have to add or subtract or do whatever you have to do to calculate the difference, right?
Yeah.
I guess you're subtracting, but and then you calculate your mileage and then you have to keep track of that. So again, this is where an app becomes incredibly useful. Mileage is actually one of the most overlooked tax expenses, and it can save you a ton of money on your taxes. Just for example, say you drive on average 4 miles a day, just for business. And I'm not talking to and from the office. To and from the office is not a tax deduction. So
Yeah, people don't remember that. Yeah.
Right. It absolutely, to and from the office is not a tax deduction. But if you're traveling to a conference, if you're traveling to meet a meet a potential client, a buyer, you're going to their house, you're driving around and showing them new houses. All of that mileage is tax deductible. So say you just drive 4 miles. 4 miles is nothing in a day, right? And you're thinking to yourself, why in the world am I going to track 4 miles? Well, 4 miles every day is 20 miles out of 5 days, right? That's $10. That's $10 in 1 week that you can expense directly against your income. That's huge.
Yeah, it is.
think.
And I think you made a notation, those little expenses, they just add up. And I think, like you said, sometimes it is a lot of work, but I think it's sometimes also, out of sight, out of mind. You just don't think about it in a quantitative way that you just shared. So I think that's huge. One of the things I've also found from coaching agents new and experienced is sometimes they have the mindset of I need to make money first in order to then track my expenses second. So it's almost like in the reverse. Because if they're new, they have no business, they maybe aren't making an income yet. So they're spending money on signs and lock boxes and paper and printers. So they don't even really get organized until they start going, oh man, I just made $30,000. Now I need to get organized.
So it's interesting that, go ahead.
Yeah, I've learned the hard way that that's the opposite. You need to create it like any other business, Subway, McDonald's. They got their accounting software, their register, equipment set up from day one, and then they open the store. I think sometimes in real estate, we wait to make money and then we think about expenses later. Is that your experience?
Yes, it is. And I will tell you that it's interesting that you bring this up. I didn't put this in my notes. And when I was rereading my notes, I thought to myself, we really should talk about this. So thank you for bringing this up. In tax law, you can carry over expenses. So say you have $10,000 worth of expenses in a year that you didn't make any income. I mean, you can roll that over into the next year when you do make income.
Oh, that's interesting.
I mean? So definitely keep track of that. And say you spent $10,000 on whatever expenses this year and you only made $5,000. That's okay. That just means that $5,000 isn't going to be taxed because you've already, you've expensed more than you have made. And the excess, which is $5,000, right? So you've spent 10, you've made 5, you still have $5,000 of expenses that you can then roll over to offset your income the next year. How great is that?
Yeah,
keep track of that stuff.
Yeah, no, that's huge.
Save you money.
It's huge. Yeah, because I think a lot in real estate it's seasonal, and I think a lot of times I'll see agents start maybe October, November, December. It's slower in our season. They're just kind of ramping up their business. January, February, still snowing. They start making income in the mid-May, June, July. But I love that you can kind of carry some of that over, so you're not working in a deficit from the beginning. So I think that's good.
Right.
So we kind of talk about meals. So, real estate agents like to entertain. They like to, maybe have a cocktail or two. What do you see? Meals tax deductible. How do we need to make sure that we're being compliant with that? And what is your thought process for meals for a real estate agent? There's a deduction.
Sure. The IRS. So it's a little bit gray. The IRS says that meals have to be ordinary, and what is the other word that they use? I wrote it down. Ordinary and, hold on, I'll find it. Ordinary and reasonable, which means that they can't be lavish. They can't be excessive. You know, you can't order steak and lobster, surf and turf, you know, at like $200 a plate and expect the IRS to cover that. If
Right.
your, you know,
But that client base isn't a normal, yeah.
Right. I mean, if your client is like, you know, the Queen of England, perhaps, you know, that is
Yeah, maybe
an
that's ordinary
appropriate
for her.
meal for her.
Yeah, exactly.
But for most of us, in most cases,
yeah,
it has to be ordinary and it has to be reasonable. So whatever you would deem that to be under the circumstances, if you can justify it to the IRS, then that's acceptable. So it's a little bit gray. Now, you cannot deduct meals just because you're at your place of business and you're eating. It doesn't work that way. But if you're meeting with a client, you have to, according to the IRS, you have to have a business meeting or a business transaction of some kind immediately before, during, or after the meal in order for it to qualify for some kind of tax deduction. And then even then, it's usually only 50%.
Gotcha.
So, yep.
Okay.
And then if you're traveling, anytime you're traveling 50 miles away from your home or further, it is considered travel and your meal is 50% tax deductible, period.
If it's closer than that, then it's still considered a meal. It's just you'd have to, it just doesn't have the same deduction.
If you are meeting with a client, it can be considered a tax deduction. If you are conducting business, right? We're not talking about like when you're going to lunch with your peers. We're talking you're meeting a client and you're buying their coffee. 50% of that is tax deductible.
Gotcha. And what's the best way to you're saying an app probably would do that too, or a paper receipt putting their name and their phone number on the top of it and saying we spoke about buying a house this week. So like having some type of paper trail that connects that meal ticket, correct?
Yes. And so with an app, there are actually a couple of ways to do this. There are applications available. I know that you had mentioned Keller Williams has one.
Yeah, we have a Hurdler as the app that we use.
Yeah. And then I know QuickBooks, I'm a QuickBooks Pro advisor, so QuickBooks is the one that I use and recommend to my clients, but I think that they operate pretty much the same way. And basically, I mean, it's easy. You literally take a picture. You can take a picture with your phone. Just take a picture of the receipt and it stores the picture. You can throw that receipt away. You don't need it any longer. You have a picture of it. It's imported in, and then you can just put in the amount right there. You just put in the amount, put in that it's an expense.
Yeah. That's awesome.
Right. So for your book, it's interesting because you're not going to do any of those calculations. So say you buy coffee, you meet a client, you spend $10 at Starbucks, right? You take a picture with your phone, you enter in your $10, you put in food expense, and you're done. In your books, it's going to deduct all of it. But when you put it into your taxes, the tax software is going to do that calculation.
Gotcha.
So you don't ever have to worry about it.
Okay. What about kind of blending in like personal home expenses and then equipment like chairs and things like that? Like, is there anything that we need to be aware of in that arena? Because we're obviously probably buying printers and, you know, working.
So I'll just share with you my personal experience. Before I became an accountant and a CPA, I really didn't know the difference between like business equipment and supplies. Like, what's the difference? And supplies,
I just don't know either.
Consumed. They're just things that are consumed within a year, like paper,
Post-it
printer,
notes
and like stamps. You know, the signs for your lawn. You know, stuff like that. Advertising, all of that is like supplies, and you know, if you're going to consume it within a year, more or less, it's a supply. Now, equipment, and it's completely tax deductible, right? Equipment, like if you buy a desk, if you buy bookcases, a chair, computer, printer, anything that's going to last for more than a year is considered an asset to your business, and it's equipment, right?
Gotcha.
Now, the IRS is a little bit, there are some things that you can completely expense in the first year if they're below a certain price point. Okay, so they have to cost less than a certain amount depending on what the item is. And then you can expense all of it the first year. If you buy something really expensive, like a $10,000 computer, you may not be able to expense all of that cost the first year. The IRS may require you to expense it over a certain amount of time, like 7 years. And they have charts galore for every piece of equipment that you could possibly imagine. Yeah. And you don't have to worry about any of that, because once you input it into your software will recognize it if you identify it correctly, and it will do the depreciation. Again, the calculation's already done for you. You don't have to worry about it. But in your books, when you input the information, just take a picture of your receipt. Another thing, and this is another aspect of an app that I really, really like, is that oftentimes you can link the app with your account or your business account if you have one, and they kind of communicate with each other. So whenever there's a transaction that happens in your account, it will show up on your books, and then you can classify that transaction. You can say business revenue. You can say revenue from teaching a class, or revenue from selling the home on H Street, or whatever, however you want to classify it. And then if that transaction is an expense, then you can literally swipe left for business expense and swipe right for personal expense. It's pretty amazing.
Any app I've ever seen now has that. And I think that's the old way we used to do it, is like a folder or a brown paper bag and put all the receipts in there. It was a mess.
A shoebox.
Obviously, a shoebox, or it has just been crazy. And then even, I'm dating myself, but the receipts would fade and the ink wouldn't even be there, and you're like, what happened? So
because you can't keep it in a hot car because they're heat activated.
Exactly. So it all like evaporate, and I'm like, oh great, this is wonderful. So so let's you brought up business accounts. I do think, not kind of in this, I guess, necessarily in the tax realm, but most of the agents maybe came from a corporate job. They obviously had maybe a checking account for their family, a savings account for their family, and now they're a real estate agent. They own this business, even if it's not making a profit at the beginning.
Right. Mm-hmm.
And I see a lot of interesting things. We're robbing Peter to pay Paul, because we have to pay expenses again before we're making money. So can you give us a little bit of your advice on bank accounts? How do we set it up, and do we need a separate bank account for business versus personal? Does it not matter? Because I think that starts off on a shaky ground, especially again when you come from maybe a corporate mindset and now you are the entrepreneur, you are the business. So can you kind of see and share with us your insights on bank account?
Sure. Yeah, absolutely. I always recommend, you can do what you want to do. You're a sole proprietor. But I always recommend going to your local bank and opening up a business account. It doesn't usually cost anything locally. Some nationwide banks may offer business accounts, but they require minimum deposits, and their minimum deposit requirement is rather large a lot of times, like Citibank or Wells Fargo. They will have very large business accounts because they have very large business clients.
Sure.
And unfortunately, when you start out, you're not a very large business client. So your best bet is to go to a local bank. I use a local bank. They don't charge me any interest. I don't pay a monthly fee for my business account. And you can literally open it up with $1. And what a business account does is it does a couple of things. It actually helps you establish yourself as a business, and it gives you credibility. A business actually isn't technically started, or it's not established until it has a business account, from a financial perspective. Having a business account will also help you and your business to start establishing credit. Once you start having revenue coming into that account, you should be able to apply for a line of credit through that bank. And then once you get a line of credit, you're further establishing your business. You're further giving credibility to your business. And then you're establishing credit, which will help you if you ever need it. If you ever want to do a huge marketing thing and you want to take out a business loan, you won't be able to take out a business loan if you don't have any credit as a business.
Right.
So,
well, and I can tell just from personal experience when it's slower in more, seasonal months, October, November, December, January, something like that. If you do have a business account, you could, again, those loan options open, you have more options to maybe get a personal loan. And then of course you repay it when business is back. So, but if, like you said, if you don't have a business account, you can't establish quote credit. You can't establish that entity. And I think sometimes we miss that at the beginning. So
yeah, and it helps you keep things separate. It helps you keep your expenses separate if you can use that business account to apply your expenses against it, because then you can just link your account and your app together, and all of that information, all those expenses just flow in, and they're all already there. So it's easy.
Right. Yeah, I mean,
it's
I think
Yeah,
I would, and it's sometimes I was just being honest. Sometimes it's a pain. Like, all right, I need to go buy a new printer. Okay, I have the money in my personal account, and I'm like, oh my gosh, it's just easier to swipe my personal card. But if I just move the money into my business account or whatever and use that business credit card or debit card, a year later, 6 months later, it's just so much easier to go, okay, I bought a printer 6 months ago. So,
right.
But it does take a little effort on your part. Otherwise, you're just swiping whatever credit card you have in your wallet or your purse. It makes it more complicated if you don't kind of take a few minutes and prioritize that. So.
Right. And it doesn't cost anything to open one out.
Yeah, I think that's the biggest thing people don't realize is they almost think that they have to, quote, have an established business to open a business checking savings. And that you can start with very little money, $10 or something.
Yep, I agree.
We kind of mentioned apps and organization and things like that. So I wanted to kind of go into maybe some specific apps or ways that we can get more organized, things like that. So what type of, you mentioned QuickBooks. You may or may not know, do you know what the cost of QuickBooks, the app, and do you have any idea of kind of what that ballpark range is for something like using?
It depends on how sophisticated you want it to be, but I know that their basic app, which is pretty much all you need, it's the only app that allows you to track your driving. And I don't know why they designed it like that, but it's $10 a month.
Gotcha.
Now, what I like about QuickBooks app specifically is that QuickBook is like a sister company of Intuit. Intuit owns QuickBooks, and Intuit also owns TurboTax. Well, they have created an integration software so that these two softwares can talk to one another. So if you download and you keep all of your income and your expenses in your QuickBooks account throughout the year, it does a couple of things. First of all, it'll match your income and your expenses, and so it can better calculate your quarterly taxes, which you're going to have to pay.
Right.
And then it'll send you reminders to pay your quarterly taxes. It'll say quarterly taxes are due. Don't forget to pay them. This is what you should pay. And then at the end of the year, if you decide to get their TurboTax application, then you can actually just send all of your QuickBooks over, and it automatically fills in all of that data.
Gotcha. So what I think that I hear you correctly, this QuickBooks app that you were talking about does track your mileage, like it does not. So
it does. It tracks your mileage. So it does a couple of things. It tracks your mileage, and you can turn that on and off if you want. If it's on, then it's really easy every time the car stops and starts, and I'm not talking like from destination to destination. I don't know how they know, but they know when you're just stopped at a stop sign or a stoplight, like they know.
Yeah.
And it's just like, I use it. It's really easy. It's, you swipe left if it's a business drive, you swipe right if it's personal, or vice versa. And
Yeah.
it's just very easy. It keeps track of it. And then it'll even tell you how much you're saving in taxes. It's pretty cool.
Yeah.
And then, you can integrate, you could connect your QuickBooks with your bank account, so it communicates together. So every time I have a transaction in my bank account, it shows up in my QuickBooks, and then I can categorize it, supplies expense, equipment expense, revenue from client A or client B. And it's really easy. And then at the end of the year, I buy, not me personally, but, if I were a client, I would buy the TurboTax. And if I were doing it myself, and then my whole QuickBooks just integrates into that, and then everything's already calculated. All my revenue, all my expenses, all my forms. It's easy. It even makes taxes easy. Yeah.
And the Keller Williams Hurdler app, it's very similar, but I think it's not monthly. It's an upfront, like 60 or 70 bucks for the app. It does the same thing. It's if you go over 10 miles an hour in your car or vehicle, it starts to calculate your mileage, and then it'll pop up left and right for business or personal. Same with, like, I have a debit card connected to, or American Express connected to my business, and I'll swipe left or right if it's a business expense, and you can click the tax button. So there's several apps out there. I think using one, whichever one it is,
Right.
I think it's a huge thing. I do personally don't like the way the reporting is on the Hurdler one. We use Intuit, like QuickBooks, for my coaching stuff, and I didn't know there was an app attached to that, so I learned something new there. And I love the fact that you said, like, you can take the picture of the receipt, you can, do what you need to do, because I think part of it is just keeping organized. We always keep all these papers in our office, and we have files and drawers full of junk anyway, and I think sometimes that also bogs us down, because we don't know we just hard to keep everything organized. So I think the app keeps it simple. What else? Is there anything?
Well, so let's talk about people that aren't phone savvy, that aren't comfortable using an app.
Techie, yeah, let's do that.
I think at the end of the day, know yourself and do what you're comfortable with, because when you make that choice, you are more likely to keep track of your income and expenses if you just do what you are personally comfortable with. If you're comfortable with your phone and taking pictures and using an app, please do it. It will take so much less time to use an application. Learn it, and it's just easy. But if you're not comfortable with that, then do what makes you feel comfortable. If that's, going to Office Max and buying a book so that you can write down all of your income and write down all your expenses and create a handwritten chart of accounts, you can do that. You can keep an Excel spreadsheet. I've seen a lot of those. Dealt with a lot of that in my career, and that's also fine. As long as you're keeping track. And, there is a certain percentage of people that just don't. They're just not good at it. They're not organized. That's not their strong suit. I'm sure that they're great at other things. Not everybody is organized, and I totally respect that. Put your stuff in a shoebox and take it to an accountant.
Exactly.
And that may seem like bad advice, but trust me when I tell you that that's excellent advice.
Yeah.
You don't have to stay organized, but then pay somebody else to help you be organized. You see what I mean? If you're not capable of doing it yourself, that's fine. Keep your expenses in a shoebox so that somebody can help you out, so that you can maximize your tax savings. Right? Don't just throw that stuff away.
I've lived with all my family are entrepreneurs, different businesses, and I remember growing up as a kid, there was a shoebox next to the key where they put their keys, their car keys. They'd take everything out of their pockets, their quarters, their money, and they'd have this wad of receipts. And literally, it was just between my mom and my dad. It was a shoebox filled of just receipts. At least they create a habit of, okay, take the car keys out of the pocket, take your money out of your pocket, and your receipts go in this box.
Right.
it's maybe not fancy, but I think the point you said at the beginning of the call, it's like dollar for dollar or 50%. I mean, if you don't get organized, you're throwing money away. You're literally
You are.
losing more potential. So I think that you kind of talked about a little bit on taxes. I wanted to kind of button this kind of the end of this part of the conversation up, but this word taxes, it's like a four-letter word that starts with a T, I guess. But it's one of those things like when you're going through taxes, what is your advice to new agents or more experienced agents who are, already in production? Maybe they have an oops, maybe they haven't managed their expenses and tracked their expenses well. What do you think we need to do or give them advice on?
I mean, start today.
There we go.
I mean, you can't, you may not be able to undo the past. You may not be able to look up past expenses. That may be a bridge too far for you, but you can, you can start today. You really can, start today with that first receipt, with that expense. Because you will save money. If you keep track of your expenses, you will save money. If you spend more than you've made, you can roll that over. I mean, why wouldn't you want to do that?
Yeah.
Right?
Yeah. And so as a sole proprietor, the IRS requires us to do quarterly taxes.
Right.
How do we know what that is? What do we do? Like, again, if we come from a corporate world where they take taxes out of our checks every month or every week, now you're in this world where you have to do quarterly taxes. Can you walk us through kind of maybe an elementary school base level on what that is?
Sure.
And maybe,
yeah.
Okay.
So, we all have to pay taxes based on based on your income bracket, right? So depending on how much money you make, it will, as a family, as a household, unless you file separately or you're not married, then you're your own household. But your income will determine which tax bracket you're in. And, the more money you make, generally the higher percentage of taxes you have to pay. So when you're first starting out, you may not know what that is. I always recommend just if you're not using an app, which will totally help you to do all of this, it will literally tell you how much you have to pay in taxes. And
if the taxes change or if rates change or different things, it'll readjust.
Yes, and it keeps track of all of your income and it offsets your income with your expenses, which means that you're not overpaying in your taxes
instantaneously, as you input them. Yeah,
that's right. So an app is great for that. But if you choose not to use an app, my recommendation is to simply take 20% of revenue every time you have income coming in, take 20% of that and pay it to the IRS. So I wouldn't wait for your quarterly whatever to roll around, because maybe you've already spent that money by the time, that first quarterly payment has come around. But if you take your taxes out every time you get paid, then your taxes have been paid and you're covered for the year. You're not going to get penalized for not paying your quarterly taxes, which can happen. And then it's easy.
Yeah.
Right?
Yeah.
You don't have to sit down and spend a whole bunch of time trying to calculate your income and your expenses and then, look up your tax bracket. And, if you just pay your 20%, you're probably going to be good. You're just starting out. You're fine.
Yeah.
And then the following year's taxes will be based on your first year's income.
Right. Okay. That makes sense. Yeah. One thing you had said, and we have written down that it says, as your business grows, you'll find you're spending more time on your business, the business side, and no longer have as much time to do that back office process. So I find that, so maybe we created good habits. Maybe we're using this app or the shoebox, whichever, maybe we are already calculating our quarterly taxes, but now we're like getting in production. We're selling a lot of houses. What is their transition plan from that shoebox and that app to something else? Because I think the word time is what you said. You only spend so much time in the day. How do we pivot, or what do we do to kind of transition to something at the next level of their production?
I mean, that's such a great question. We're only human beings. We only have 24 hours in every day, right? And when you're first starting out, you may find that you have a lot of spare time.
I wish.
You've already you've already done everything that you can do or that you can afford to do to generate revenue. So you have a little bit of time to spend on sort of your expense processes. So I like to break things down, clearly from a financial perspective, break things down for you have revenue generating activities and you have expense activities. Your expense activities is all your back office stuff, like dealing with your paperwork, doing your QuickBooks, paying your taxes, spending the time to sort of do all of those things. That's not creating income for you at all, right? So if it's not creating income, it's an expense activity, right?
And
so all of your other
activities, painful activity.
Yeah.
My personality, holy cow. I like making money. I just don't like counting counting it up and tracking the expenses. So yeah, I think that's a big portion of it. Yeah.
Right.
But I think it's important, revenue time versus expense time, because we all have that, regardless of what type of business we run. And taxes and managing and organizing your back office, it's not really a revenue,
Right. So when you get busy enough, when you get so busy to the point that you're sort of struggling between how am I going to divide my time, this should not be a discussion for you. From a financial perspective, this is a no-brainer. You need to outsource, or in other words, hire an accountant to do that back office work, because it costs you less to pay somebody to do that work for you. It costs you less because the time that you're spending is worth more to you than it costs to outsource it to somebody else. So when your time becomes so valuable that you don't have enough time to do your back office stuff, then you need to pay somebody to do it because it costs you less. You want to spend as much time as you can on revenue generating activities because it's going to increase your revenue. Like, that's it. It's very simple. Like, if you're having a struggle, I don't have enough time to do my back office work, I've got all this revenue generating activities I have to do, you need to choose the revenue generating activities and outsource all of that back office work.
Yeah.
Like, once you get to that point, you're going to be making so much more money by letting somebody else do your back office work.
Well, and at Keller Williams, we talk a lot about leverage. So it's like, what could we be doing that's producing income versus an expense? So sometimes we get super creative, making flyers and different things. Yes, it's pretty and fun, but is that making you money? No. So I think it's the same thing when you're getting started. Have the app or have the shoebox, but when it gets to a certain point, you're worth more per hour than paying a professional do that. I think it's also important. I don't personally want to know what all the tax laws are, and I don't want to keep up with the chart of accounts. That's just not my profession. And I think in real estate, we always talk about we need to stay in the scope of our role. So, and we're not a home inspector. We're not a mortgage lender. We sell real estate. We facilitate the process. And so I would say, as much as the tips you've given us, also, I think that's what you do 24 hours a day, probably 7 days a week. I want to rely on somebody that knows those tips and tricks rather than me Googling it, because Google is a vicious thing. It doesn't always have accurate information, especially when you're not even sure what you're even trying to Google. So.
Right.
Yeah.
Right. And so when you hire a professional, I think that's always the case. Not always, but that is often the case when you hire a professional who really is a professional and knows what they're doing. Whether you hire a professional to help you purchase a house, or you hire a professional to help you manage your business or help you manage your back office, they are going to, like, that's their profession. That is what they do for a living. That is what they are good at. So chances are, if you hire a professional, your taxes are going to be done right. Your quarterly taxes are going to be paid on time. You're going to avoid IRS penalties. Hopefully, you're going to avoid an audit. But if you are audited, you can take comfort in the fact that you've hired a professional to represent you to the IRS. That's what certified public accountants do. We can represent clients to the IRS. Like, we can save you time, because when you're audited, it takes a huge amount of time. But when you have an accountant that you've used, the auditor goes to the accountant and wastes that person's time. And guess what? Guess what you get to do with your time? You get to continue creating revenue for yourself.
Yeah.
You don't have to worry about an audit because your accountant has got all the information that auditor needs. So
as far as fees or investments in a CPA, how do you, if you're the consumer hiring a CPA, how do you get paid by the hour? Do you get paid by the tax return? And then is there a way that we can, minimize that expense to a certain degree? We want to pay you, and yet we don't want to overly expense ourselves. So what's the general structure of, is it hourly, and is there ways that we can kind of be effective and efficient with giving that information to you from a cost savings for us?
That's a really good question. I just have to laugh because accounting firms tend to be all over the place in terms of cost. It depends on a lot of things. It depends on their size. It depends on the expertise available within that office. I can tell you for myself, it depends. I'm a real, I'm, yes.
If they're a hot mess, you're like, I'm charging you a lot. No, just kidding.
I mean, I do charge an hourly rate, but it depends. I really like to work with small businesses, and I try to create a plan that works for them based on a budget that they're comfortable with. So, and you're right, Drew, it just depends on how much legwork they want to do in the beginning. Like, for example, I have a couple of clients right now. They pretty much do their own QuickBooks. Like, they do their own books with the app, but they pay me $50 a month, and I pay for the app, and at the end of the year, I do their taxes.
Gotcha.
So how that works, just for me, is that they input all their income and expenses.
But
if they have a question, I oversee it. Sometimes I correct, and I give them a call and say, hey, you entered this in, it's really this. I just wanted to give you a heads up so that if it comes around again, you know how to deal with it. Or they'll call me and they'll say, I don't know how to deal with this. So it's mutually beneficial. Like, they're doing all of the input, so I don't have to spend my time doing it. And I can spend 10, 15 minutes a month on their books, making sure everything's okay. So at the end of the year, I know their taxes are going to be right because I've been looking at their books all year long. So that saves me a lot of time during tax season.
Well, I guess
so I give them a benefit.
That's a big thing. Yeah, if you're monitoring it consistently, again, the shoebox versus the app, if they just give you a shoebox, a month before tax time, you're going to be putting hours in organizing that shoebox of receipts and putting it into QuickBooks manually.
Right. And so that's the difference between like paying $50 a month for, monthly monitoring, and taxes at the end of the year are already paid for, which is pretty great in my opinion, versus like, I'm sorry, I have to charge you $85 an hour for this bookkeeping, plus I'm going to charge you $3,000 for your business taxes.
Right.
You see the difference?
Totally, I see that. Yeah.
Yeah.
Awesome. Well, kind of my last topic, we talked about technology a little bit, but I always get this question, like, should I create an LLC or a corporation? Because again, they came from a corporate world. Now they're the sole proprietor. So it's, it's Drew Demery. And now do I want to create Drew Demery Inc. or Drew Demery Real Estate LLC? Like, is there some rule of thumb on when someone should have an LLC, should not have an LLC? Kind of your opinion on that, because I usually get a different opinion based on when I ask that question.
Well, based on our conversation, I feel like there's like an extra layer of stuff that they have to do as a real estate agent if they do decide to open up as an LLC.
Yeah, just
and
a couple
I don't know
steps
what that.
Yeah, DPOR, which regulates our license, you have to have another business entity license, which is not incredibly hard, but you have to do that. And then you have to register with the county that you're in, because you have to have a business license with the county. And then the rest of it's pretty typical with any other, small business you probably work with. But do you see that, if I'm if I'm at 20,000 in income is different than $200,000 in income. Do you see that there's a point where they should, like financially, or is it a time frame? Is there?
Well, so a couple of things. I do think that an LLC, when you establish it, it gives you a certain level of security against liability. For example, if somebody decides to sue you, if you're an LLC, they can only go after the assets in your business. They can't go after your personal assets, the assets of your family, your home, your husband's assets. Like, it creates a barrier of protection against liability. That's why it's called limited liability, right?
Right.
But for tax purposes, you are still a flow-through entity, sole proprietor. So in terms of the IRS interpretation, there's no difference. Your income and your expenses is going to flow right through onto your personal tax return.
Right. I don't know that a lot of people know that. And I think I had to learn that through the first LLC I created. I was like, oh, I thought this was some tax benefit thing. And it did not save me on taxes, I can tell you.
It does not. Now, if you want to establish yourself as a corporation, your corporation will pay corporate taxes, and then you will receive a W-2.
Yes, I've done that too.
Pay yourself in some other way. So
a little bit more complicated, and that was something, at least for myself, until I made a certain income, didn't feel the return on that investment and the paperwork and the whole thing was worth that process. But LLCs, my experience has been $300 or $400, kind of get it set up through all the channels that need to make it legal and correct. But I think the liability is the key thing, and then the flow through. Yeah. Mm-hmm. Awesome. Well, I've got tons of notes. So what else? Is there anything any last minute things you can think of where we kind of hang up and end the call? Any session thoughts after our discussion that we want to make sure we maybe missed or forgot to cover?
I can't think of anything right now, but if I do think of something, I certainly will add it to the notes that we have together.
The one that I highlighted that you put on the notes, I thought it says, I can't stress this enough, as a business owner, doing nothing is not an option.
Yeah.
And I think that's important, because I think when we talk about money, sometimes it gets funky in the room and vibes get weird, and we talk about taxes and LLCs, but you got to do something. It's an app, it's a shoebox, it's managing it, like you said, it's writing it in a journal. And I love that you said, when do you need to start it? Like, start it today. So, good. Well, what is the best way to contact you if they have more questions? Is there an email or a phone number that I can jot down for you that they can reach out to you personally and see if they have a one-on-one conversation with you?
Absolutely. You've got my email. It's barb.elder@ducktax.com. And I would be happy to receive an email from anybody who has questions. I can call them. We can set up an appointment to talk over the phone. I don't generally take phone calls because I'm working all day, and if I took phone calls, I would not get work done.
No, I want you to work on my stuff, not answer all these people's questions about phone. I get it. So the best method, it would be to send your email to everybody so they can kind of email you and get on your schedule, and then you do a phone call with them as far as kind of walking them through any one-off conversations that you may need to have them. Okay?
Sure, yeah, that'd be fine.
Well, awesome. Well, thank you for your time. And I will send your information out to everybody. And I'll also disseminate these notes. So if anyone wasn't able to take notes or want to review them in writing, we'll have them as well. So we'll have a good Thursday. Thank you so much for your time. It's super helpful.
Thank you.
Thank you, guys. I'll talk to you guys.
Bye, Drew.
Bye.